In the last two videos, I created the single step and the multiple step income statement. Regardless of which one you create, the number at the bottom of the statement was the same, and it is that number that I'm now going to use in the statement of changes in equity. I'm going to produce it in good form, and it's going to be based on IFRS. As always, I start with the name of the company, then the name of the statement, and of course the dating. In this case, again, we've got year ended September 30th, 2020. As you know, a statement of changes in equity is always in column format. I've got common shares. I know this from my listing. I also have to represent retained earnings. And I need a total. If you look at the flow chart that we did at the very beginning of this process, you will notice that the flow chart shows us exactly what has to be shown on the statement of changes in equity. The first thing we need is our opening balances. Let's go back to our listing to find them. Right here, we have common shares, and the common shares are 64,937. It's important to recognize that the common shares on the listing you receive will be the ending common shares, not the opening balance. Ending balance is always given to you on the listing. So you cannot use this as the opening balance because it will automatically be wrong. In addition, you'll notice that we also have retained earnings. The retained earnings are the October 1st balance, so this is the opening balance. So the listing you receive will always include the opening balance for retained earnings, which is $194,503. If we don't have the opening balance for common shares, how do we get it? Remember, I pointed out that the additional information is very important. We'll be using it in the statements. Notice that this is the opening balance to common shares, $16,234. That's the opening balance. We've got to use that in our statement of changes in equity. So the opening balance for common shares is $16,234, not from the listing, but from the additional information. Retained earnings is $194,503, and that was definitely from the listing. We then add these two together to calculate the total, $210,737. Next, what do we have to do? Well, we have to show how these things changed. So first, I'm going to put in net income. I know that income is never added into common shares. Instead, income is always added to retained earnings. That is $99,400. Notice that that is the amount from the income statement. Both the single and multiple step income statement ended up with the same net income. I add 0 plus 99,400 and I end up with 99,400. Next, I've got to reflect dividends. The dividends come from the listing, and it was 8,142. Dividends do not impact the amount of common shares. Instead, they reduce the amount of retained earnings. So this is negative $8,142. 0 plus a negative number would equal negative 8,142. Finally, we need to recognize that shares may have been issued or repurchased. How can we figure out which happened? Well, we look at the closing balance. We know the closing balance to common shares because it was given on the listing, $64,937. Since this amount is larger than the $16,234, which was the opening balance, that tells us whether shares were repurchased or issued. If shares were issued, then the common share amount would increase. This is because by issuing shares, the company has increased the amount of equity because they have increased the amount that is owed to the owners. Common shares would go up. If common shares were repurchased, then the amount of ownership in the company is actually going down, and the amount of common shares outstanding is also going down. So if there was a share repurchase, the difference between these amounts would result in a negative number. 64,937 minus 16,234 is a positive number, which indicates that shares have been issued. The difference, 43,703. Shares being issued or repurchased never, ever, ever affect retained earnings. So the total would be 43,703. If I now add all three columns up, I will determine the ending balances that go to the equity section for the statement of financial position. For retained earnings, the total is 285,761. And for total equity, it is 350,698. If you have done this correctly, you will notice that this is a matrix. So we should be able to add across for every single row, and we should be able to add down for every single column. If this matrix does not work out perfectly, you've done something wrong. Again, notice that these closing balances right here will all be transferred to the statement of financial position in the equity section. And note that the 99,400 came from the income statement. In my next video, I'm going to do the statement of financial position.